Thanks very much for joining me on The Property Show, your one-stop shop for everything on India's real estate. News, views, buy, sell or invest. This is the show you should be tuning into and calling into. So pick up the phone and call us if you want some solid data-backed advice for your property decisions. All the details on your screen. We'll be joined also by Gaurav Pandey, Head of Research, Prop Equity, to take all your questions and of course give you the best and the right answers. Okay, let's get rolling with the smart investment options in Noida and Gurgaon. That's coming up on the show today. Next, we have top of the chart recommendations in Mumbai and Pune in the cities that we'll cover. Also, prime properties in Jaipur and Goa. That's a city I love visiting. And of course, a big discussion relevant to all you die-hard property investors. India's emerging investment hotspots with Jones Lang LaSalle country head Anuj Puri. So stay glued to your couches. Let's begin with a quick look at some of the top news which affects property and property prices across the country.
Host of hurdles have derailed the progress of Phase 2 of Mumbai Metro, which proposes to stretch from Charkop to Mankhurd. While the first phase of the Mumbai Metro will commence from September, the authorities have already filed the proposal for the third phase without any signs of operations for Phase 2. The government is struggling to clear the route for construction even after 4 years of inception. The Delhi Development Authority has extended financial support for the Delhi Metro Rail Corporation's Phase 3 and 4 expansion plans in Delhi NCR. Ministry of Urban Development has asked DDA to allocate an additional fund of Rs 10,000 crore for Phase 3 expansion, apart from the Rs 1,500 crore that Land Development Agency has promised to sanction. This is aimed at lowering Delhi Metro's dependency on Japan for providing soft loans for expansion. A crucial meeting between Maharashtra's Chief Minister and Union Environment Minister did not reap too much for the stuck key infrastructure projects. Apart from granting in principle nod for a memorial of Chhatrapati Shivaji off the city's coast, the meeting did not result in getting any concrete announcements on the green hurdles faced by the crucial infrastructure projects like the Coastal Ring Road, the Charkop-Bandra-Mankhurd Metro route and the Navi Mumbai International Airport. Public broadcaster Prasar Bharati plans to raise Rs 4,000 crore over the next 2 to 3 years by monetizing its surplus land parcels across the country. 2 land parcels of 400 acre and 200 acre in Delhi and 2 to 3 land parcels in Mumbai will be the first to go. This move is seen as a part of a larger restructuring process to revive this debt-laden enterprise with offices and technical setups at more than 2,000 locations across India. Government has allowed cash-starved highway developers to exit projects anytime after achieving financial closure and bid for other projects. This decision is aimed to boost availability of fresh equity for new highway projects. In the previous arrangement, a road contractor has to be associated with the project for the full duration of the concession period, which ranges from 25 to 30 years. This was making finding bidders for major projects extremely difficult.
Amidst all the gloom in the economy, slowing sales, flat rentals in real estate, if you lay your hands on a report titled Emerging Investment Hotspots, Mining Opportunities from the Complex Real Estate Terrain of India, you definitely want to go through it with a tooth comb. Jones Lang LaSalle recently released this very interesting report, and the report has identified 8 sub-markets as investment hotspots across the top 7 cities in India. These investment hotspots are further divided into 2 categories, emerging investment hotspots. It begins with Chennai, the southern periphery, OMR, GST Road, ECR are some which are mentioned. There's Hyderabad, Gachibowli to be precise, the micro market. Kolkata, there's Rajarhat, NCR, Greater Noida, Pune, Viman Nagar and Nagar Road. And of course, there's a sub-classification between the emerging hotspots. There's also growing markets, Bangalore, Whitefield, Navi Mumbai. That's, of course, a whole big region of the Mumbai region, NCR, Noida, MMR, Thane. Okay, so let's bring in the man behind the report, Anuj Puri, Chairman and Country Head, Jones Lang LaSalle. Anuj, thank you very much. And of course, we do want you to share with us a detailed perspective. Pleasure to have you with us.
Thank you very much, Manisha.
Okay. So
you know, it's a very interesting report, and we've taken about 4 months to put this together, and we've researched each of these micro markets in those cities, and there were 5 criteria that we laid out to say is that how do we classify it as a hotspot investment. You know, the first was whether there is a social infrastructure that has been built and it wasn't there before. That was the first classification. The second was connectivity. with the main city, because most of these hotspots that you're going to find are really at the periphery or the emerging micro markets within a city. So how are they connected with the main parts of the city? The third was pricing. Everything that we have listed, we wanted it to be below $100 per square foot, which meant that it needed to be below 6,000 rupees per square foot, each of these opportunities. And that was very important from our perspective, because the fourth one was really, where do we see the rates go up? So, what is the investment opportunity and the capital appreciation going to be in, considering those prices? And the last was, how is the economic activity within that micro market really fitting in? So those were the 5 criteria, and then we ranked 27 hotspots, and then emerged with 8 which were really ranking up on the top, right from which are emerging, like you said, Chennai and Calcutta and Hyderabad, to some hotspot opportunities which have been identified and growing, just like Noida or Thane or Navi Mumbai.
Just for our viewers, if you could just explain to us, what's the difference between emerging and growing? Are growing slightly more mature markets than emerging?
That's a very good point, so Manisha. The emerging are where people really haven't identified that opportunity as a hotspot as yet. And we believe the amount of investment that has gone on newer economy and the infrastructure that is yet to come into place is much more than what is visible to the eye. So as a result of it, these are the markets where we're seeing a lot of employment opportunity going to get created over the next 2 to 3 years, and a lot more infrastructure that will come in there, whether this is the new connectivity with the road or the railway station or the new IT parks that are going to get emerged over the next 2 to 3 years to be able to bring in a lot of working population to come in there. On the ones that have already started to emerge and grow, that is very evident, where they can see that the growth has happened and the infrastructure is already put in place, and there is a lot of employment that has generated, and it will continue to generate. So that is a visible investment opportunity which is on the growth path. And on the emerging one, which is a bit silent today, but we believe over the next 2 to 3 years, it will have a much more rapid growth compared to some of the more mature markets.
Anuj, so I'm going to start with a market that I understand the best because it's closest to me, and let's talk about Greater Noida. This market has been fairly depressed. It's really missed the boat if you look at the other parts of NCR. Great connectivity, great infrastructure that's been there for the longest time. But that very big key thing that you mentioned in your report, employment generation, has been missing from Greater Noida. Do you think it's going to catch up now?
Manisha, very, very interesting point, and I would say that is probably the topmost city if you were to consider, because of 2 points. One, there is a huge amount of economic activity infrastructure. By that I mean SEZs and IT parks that have been built up there. So infrastructure is ready there, but it hasn't filled up as quickly as one would have thought. And the reason that it did not fill up was because after the Lehman crisis, the rents in Gurgaon came down dramatically. And the rents today are back at the peak level what it was before Lehman. So the Gurgaon rents are really up there at 90, 95 rupees. And if you were to look at Noida, we are at 35, 40 rupees in Noida. And hence the cost arbitrage today is making that difference, where corporates are looking to move away from Gurgaon and say we are going to go to Greater Noida. That wasn't the case a year and a half ago, because the Gurgaon rents were not that high at 90 rupees, and the cost arbitrage moving from Gurgaon to Greater Noida wasn't as substantial. So today when we are going to the corporates, they are saying is, look, we need to consider Greater Noida because the difference between the rentals is very high. That's the first point. The second, which is a very interesting point and perhaps a bit contrarian, is that most of the developers have made money not by giving a product or by developing, but through the capital appreciation that has happened in land.